Okay, what's going on, traders? What up, tycoons? Super excited for today's video. We're breaking down HBAR, okay? This one is really interesting. We have a lot of nice things setting up. It's been trading very well to some technical analysis. So I'm just going to break down some of the most recent price action for you guys, go over a term known as bullish divergence. It's something where you have a low here, okay, and a low here. So notice this is clearly in a downtrend, right? We're making lower lows on the price action of this token, but here on the relative strength index, which measures the relative strength of a specific token that you're looking at, we can see that we had a low here, right? And it actually came up and made a higher low here. So what that's telling you is that while this token has been in a downtrend and the price has been dropping, the relative strength has actually been increasing. And so once you start to notice this, and you start to notice how it's bouncing off of this trend line here, right? Because we had a low here, we had a lower low here, we got a nice little bounce, boom, okay? And then we came down again, touched that trend line again, had a nice little bounce. And here we're just hovering right over this trend line, and it's really trying to make its way up. We're going to go over why I have these three yellow lines here. These are going to be resistance levels, key resistance levels that are formulated using this tool over here, using the fibs, okay? But before we do that, we'll break down a couple easy chart patterns that you can start to look at as a beginner, right? The first one is the rising wedge. So we're seeing price action, zigzag in between these two trend lines, right? Where we're making a high here, higher high, higher high. And then here we have a low, higher low, higher low. Once you break this trend line to the bottom, in a perfect world scenario, you're going to see it come down to where the pattern started, right? Now, we could extend this trend line a little bit more like this to try and include these. And ultimately, we did come down and drop down to this level. But I just want to highlight, for simplicity, right? We have the rising wedge. We broke the trend line and you see three big candles down, right? We're looking at the daily chart. So that's 3 days of pure red. Now, why do I have this on here? Okay. Again, this is the fibs. And so what we're doing is we're using this to see retracement levels. All right. Because nothing is going to move straight up, right? Or nothing's going to move straight down. It's going to retrace. So what you can do is you can measure the swing high up here and take it down to your swing low. And you'll see that once it comes down, it retraces to these levels and they were valid resistance levels. Okay. We got rejected right here at the 61.8. That's also known as the golden ratio, right? The 61.8% level on the fibs, AKA the golden ratio, is a level where we get rejected a lot of times. Now, the reason I have the 50% and the 38.2% is because those are also valid rejection levels as well. And these are the three most common and most watched. All right. And we got a very textbook rejection right here at the 61.8, but we had a very bullish pattern right here, okay, known as the falling wedge. Okay, it's the opposite of the rising wedge. That's a bearish pattern. We had a bullish pattern here with the falling wedge. We got a very nice breakout, and we got the perfect world scenario where we came up to where the pattern began, and it also rejected at the 61.8% level very beautifully. Okay, so beautiful technical analysis, following the technicals extremely well. If we come over here, all right, and take a look at what it's doing right now, most recently, all right, what I have is this swing high connected to the swing low down here, and we're going to see, all right, as it's come down, and we've already got rejected once at the 61.8% level. All right, the more times you test the level, the weaker it gets. So as we are trying to rally and build some momentum currently right now, we need to break through the 38.2, the 50%, and the 61.8% levels. And once we do that, we have some price targets up here that we're going to look for on the upside, right? And if we zoom out a little bit, we can see where I got those from. Okay. And that's from the most recent high, or not the most recent high, I'm sorry, but that's from this high over here in the past. All right. And connecting it to the bottoms down here. So if we are able to break past this initial 61.8% retracement level, all right, we're going to retrace up to these levels. Okay. And those are going to be the 38.2, 50%, and 61.8. So we could see H bar go all the way up to 0.0898 if we get a full retracement back up to the 61.8% level of this move down, right? So notice how we've had some small moves to the upside, okay? And they've been rejected, right? Like if we just draw this over here, okay, and just swing it over here, we can see that we've already been respecting these levels pretty well, right? We come down all the way to these lows, we come up, we've gotten rejected at the 50% level, all right, and then we come down and we come up and we haven't even been able to test the 38.2% level here recently, right? So that's what we're going to be looking for and looking at on HBAR. If we can break out past the 61.8 down here of this smaller move, which is right around 0.0672. So above 0.0672, we could see 0.0765, 0.0831, and 0.0896. It all just depends on, how we react to these golden ratio numbers and if we're able to break through them. If not, we're ultimately going to head back down lower. So yeah, that's basically it. Now, if you guys want me to break down the entire history of the chart, I can do that. Those videos have been very popular on the channel, where, I basically go and show you guys the entire chart from A to Z, all of the patterns, all of the divergences, all of the different signals, buy or sell signals, either ones, and go over how there's a few instances where you get a combination where you get two or three signals at a time, and how that really helps give you that edge that you need, because trading is like going to war, going to battle. You really need an edge in battle. You can't bring a knife to a gunfight. You have to be prepared and bring the proper weapons. And these are a couple of the weapons that you should be bringing, to the trading battlefield. Okay. So subscribe to the channel if you're new. Comment down below if you guys want me to break down the entire history of the HBAR chart. I'd be happy to do that for you. And like this video if you found anything useful or you learned anything new.